Hello, thank you for joining us today. My name is Eric Radez. I'm the president of Strategic Investment Insights Chicago. I'd just like to give you a little bit of a background as to where we've come from. Our show was originally started by my father, Rich Radez, back in 1977. It was originally called the Chicago Natural Resource and Technology Expo. And we've always focused on the Chicago area, being that the financial industry is so strong there. And we look forward to continuing down that path as we go forward with a rebranding into our new name, which is Strategic Investment Insights. Something that's always made our events very special and different than a lot of the other investor conferences that happen around the world is, we really take a quality over quantity approach to how we do things. We make a very intimate environment that's welcoming and warm to everybody. We serve great food for a couple days. We invite everybody to mingle, and we have some really exciting panel discussions that take place on both days of our events that we offer question and answer to all of our audience members. And it's a really engaging environment, and we're just really looking forward to the show we have coming up on May 6th and 7th, and we'll hope that you can join us. The video today is to give you an overview of the conference and to tell you why it is important to individual investors, financial professionals, and the media alike to be a part of the show. We're going to have a little bit of everything there for everyone to be a part of, and we think that it will be very much worth everyone's time to join us in May. So I would like to turn it over to Chris Temple, who will be the moderator of both of our panel discussions at Strategic Investment Insights, and talk a little bit about the themes of the show and some of the things that are going on in the markets today that will make this event very compelling for everyone involved. Chris.
Well, thanks, Eric. It's been a lot of fun to be involved with you and your dad for a good number of years now. And there's a lot of reasons, folks, why we all put our heads together late last year to come up with this game plan that you're going to learn a little bit about today. We're going to give you a preview of Strategic Investment Insights, tell you why we've done some of the things that we're doing. And especially for those of you who are out there, if you're a member of the media, trying to make sense of what's going on in this changing world for your audiences, if you're involved in public policy on everything from biotech and medical technology that we're going to have some companies exhibiting on, to probably the biggest single theme of green energy and critical minerals, and frankly, the new energy crisis that has started to take place in the world. You need to understand how these things work. But I want to say for a minute though, Eric, a few things about financial professionals, because it's like Yogi Berra had that Berraism. It feels like deja vu all over again. And I felt that just this morning. You and I are recording this on Tuesday, the 12th of April. This morning, when I was watching CNBC, they had a report. Bob Pisani, one of the reporters, was down in Miami, down the road from me here, at a big ETF conference. And they had a couple thousand registered investment advisors and similar financial professionals. And in Pisani's words, he said, these people are terrified. What has gone on for years now, folks, but that you're taught, if you're a broker dealer or representative of broker dealer, if you work for an Edward Jones, an Ameriprise, whoever you might be, and I just to throw a couple of those names out there, less so maybe with registered investment advisors that have a bit more independence, you haven't had to do much. You haven't had to think much. You close your eyes, you find the best ETFs that meet your 60-40 mix of stocks and bonds for your conservative retirees, and you make money like clockwork. Those strategies have been upended, if not bombed out now, for several months, and it's not going to change. And so a lot of these people, as Pisani was talking about today, are trying to find out the meaning of life, I guess you might say. What is this new world we're in? What the heck just happened? Is this an aberration? Is it a dream we're going to wake up from? Or has our whole regimen and playbook changed to the point where we've got to throw it out? And the reason, Eric and folks, that seemed like deja vu to me was that way back in 1979, at the ripe old age of 18 years old, straight out of high school, I got licensed to be in a financial planning business. And that was at a time when in some respects we had a situation that had been evolving like we face today. Inflation was moving into double digits. Interest rates were much higher, of course, back then. We won't ever see those rates again unless the world is about to end, I don't think. But they've certainly been going up. And, you know, one of the things that we did back then, the firm I was with, is that we would put our clients into different insurance products, annuities, limited partnerships in energy and real estate. And in particular, one of the things that I was most proud of for a while was that I put a lot of my early clients, all of them pretty much old enough to be my parents, if not my grandparents, into shares of a particular mutual fund that had gotten, for those days, you didn't have sector funds per se back, 40 plus years ago. They were all garden variety general mutual funds. Most of the fund managers were bottom up investors, but this particular fund had decided that they were going to go heavy into mining, into oil and gas and things like that, that were doing especially well as inflation continued to cook as we got into 79 and 80. That fund in 1979 was up 32% in value. In 1980, it was up just over 60%. And in those days, those type of returns on mutual funds were unheard of. After that, many years after that, you might have got returns like that in some of the go-go stocks and things like that. I remember one Y2K fund I had people trade into in 1999 was up 140% or something like that. But back in 79 and 80, that was an aberration. So I'm feeling pretty good about life. As you can imagine, all of these people that are my older clients, well, I'm the boy wonder, right? Well, what goes up must come down. And all of a sudden, I'm getting calls not to congratulate me and wonder if they should put more money into this stuff. But Chris, why are these things going down now? What should I do? And I can tell you that the most helpless feeling in the world to a young, wet behind the ears, idealistic financial planner was, I don't know. I asked the boss of the firm I worked with. I asked the wholesaler of the mutual funds. I asked anybody who would listen. And we started writing these things back down. Now, the point is this, folks, to draw a corollary or parallel to today. The reason why these things started going down was because the Federal Reserve under Paul Volcker had done an abrupt change in monetary policy, which at that time was the greatest change since that central bank was created in 1913. And yet all of us are caught flat-footed wondering what happened. Nobody knew how these things work, and nobody had the sense to realize that when Fed policy changes like that, your investment strategy has to change. And even now you've got people who don't seem to be taking seriously the fact, and we're not going to get back to the interest rate levels that we had back 40 years ago, not even close. The Fed's going to play what I've called this game of monetary Jenga. Yeah, they're going to talk tough, they're going to act tough, they're going to try belatedly now as the firemen to put out the fire that the arsonist Jerome Powell created, over the last couple of years, and they'll pull out one too many sticks in the end. It's not going to be tomorrow or next month or maybe even this year still, depending on how things turn out, but that will happen. And the trouble that a lot of people are having, the trouble that these investment advisors in Miami that Pisani was talking about today are having, is that they have no strategy for this. They have no understanding. They all, just like I was trained over 40 years ago, we were all good at helping you fill out the paperwork, make out the check. These are the fine products that we're selling. But as far as understanding what makes all of this stuff tick, understanding the global events now that are complicating all of this, nobody has a clue. And that's what you're going to get when you come to Strategic Investment Insights. And again, as Eric said, we hope you can come in person. If not, you can register on the website for the virtual presence. And of course, you'll get access to all of the different information, our program and the companies that will be there and that kind of thing. So it's a new world. There's a lot of things that even beyond what we saw in the 70s and early 80s, Eric, that have changed, and they're changing irrevocably. We're going to see some things that we literally have never lived through.
And, they said, inflation is where it was 12.5%, I believe, is what I heard this morning. And that's something that hasn't taken place in a long time, 40 plus years, as you've said. So do you think inflation is here to stay?
I do, and we may this morning with the year over year number. The official year over year number I think came in at 8.5% for the consumer price index. You know, when you look at shadow stats that's run by John Williams, we're arguably more like double that for the average American household. But whatever it is, no question. And the Fed will probably in the next couple or 3 months have some cause to say, see, we told you. Because instead of year over year of 8.5%, maybe it'll come down to 8 or down to 7, but it ain't coming down to 2. I mean, this idea that people have, and this is where a lot of people still aren't really taking this new world seriously, Eric. There are things that have changed that are going to prohibit us from ever going back down to that trend again. One of the things that changed with that epic that I mentioned from 40 years or so ago, when Paul Volcker did what he did in raising interest rates, snuffing out the inflation, but then doing a 180, like I explained to our group that met in the Chicagoland area last year, when I talked about the whole history of this. What happened is that they unleashed this new regimen where inflation, when you look at the creation of money in the last 40 years, has been far, far in excess of what it was in the 1970s. But they figured out a way, and we won't go into the details today. We'll talk about that at the show. I've talked about it before and will further. But they figured out a way that as a first matter, that monetary inflation would go into asset prices. So stocks went up from, the Dow Jones average was bouncing either side of 1,000 for years when I got into this industry. Now we're at 34,000 and some change. But until recently, you didn't have the same kind of pickup in consumer inflation, which is what Joe Sixpack and Sally Soccer Mom are worried about, or Aunt Fred and or Uncle Fred and Aunt Myrtle, the retirees, our grandparents, when they're trying to figure out what their cost of living increase is going to be and if they could make ends meet. Their kind of inflation stayed fairly tame for a while because we had these disinflationary things that had been unleashed. Two big ones. One is labor. There's a reason why the powers that be in this country fired Americans and hired people in Thailand, China, Vietnam, Africa, wherever. It's because it was to keep costs down and their profits up. So that was a damper on things. Furthermore, over that period of time, with more investment going into financial assets and more attention there, productivity, yes, did get better in some ways. You didn't really have the commodity booms that you had. In inflation adjusted terms, gold hit its peak in 1980 and never reached that peak again until in a fairly recent past. You can say that for a lot of things too. But all of a sudden, all of these things are bubbling up, all right? And there's two reasons, actually there's three reasons why, or more, why inflation is going to stay the way it is. First of all, despite it's now again playing fireman rather than arsonist, the Fed in the last 2 years especially, when 30% of all of the dollars ever created came into being in the last 2 years in the name of fighting this COVID pandemic, there's a lot of liquidity out there. There's way too much money still chasing limited goods in some instances. So even though the Fed is going to try and rein that in somewhat, they're not going to put very much of that toothpaste back in a tube. That's number one. Number two, labor costs are through being a positive when it comes to the overall inflation numbers. For the first time in a very long time, really in 40 some years, in the last year or two, America's workers are starting to get more in the way of wage hikes. They still are not enough to keep up with the soaring cost of living, but it's a less bad situation, I guess you can say, and it's going to continue to be that. You look at foreign countries where coolie labor has been used for a long time to help the powers that be in the Western countries, chiefly, of course, the US, keep prices down. That equation is changing. I've got one of my two signature essays over the years is called The New Imperialism. And I've talked about how centuries ago, the rich, prosperous, developed nations and empires of the past would send their ships and their conquering armies across the seas they'd find some new land inhabited by, quote, savages and this kind of thing. And they'd take some back home as slaves. They'd stay there and impress others into servitude. They'd get them to mine their own metals. They'd get them to harvest their own food and give it to the conquering armies. And, you know, the reward they got is maybe they weren't all killed, you know, and I'm being, of course, sarcastic in saying that. Now, that was called imperialism. We're told that doesn't happen anymore. Well, ask yourself, what is the difference between that and in recent years, when these same nations, the powerful nations of the world, instead of sending ships and conquering armies and doing it overtly, they send trade ministers and bankers and lawyers and economists and politicians and accomplish just about the same thing, because these developed nations that have got rich resources, South America, Africa, parts of Asia, they get left with the crumbs. Well, that's over with too. They're also done working for slave wages all the time. So all the world over, you're starting to see a shift, and it's because it's morally correct. It's an economic imperative for some of these countries and more. So around the world, you're seeing what used to be cheap labor not be so cheap anymore. So the labor cost, labor and energy are the two biggest inputs, Eric, into the CPI. They're both going in the wrong direction. Energy, which is going to be a huge theme at the conference. I said it a minute ago, we're in a new energy crisis. Everything is going to be much, much more expensive going forward. And partly when you look at the green economy, and we're going to talk a lot about this, not only has there been gross underinvestment in all of these things. It's why copper has been strong, lithium, nickel, you name it. There's hardly anything where you don't have a hugely bullish setup. And this is another distinction today that you need to get your head around, folks, all of you, is that it's not a matter of, like with energy for a spell in the 70s rather, you had an oil embargo. There's plenty of oil, but for a while we weren't being on the receiving end of the oil sales. Some of the Arab world was mad at the US for different reasons and said, all right, what the heck with you, we're not going to sell you the oil. And that was when President Ford at one point said to Saudi Arabia specifically, look, we're responsible for your existence. We protect your rear ends from enemies, and you're going to sell us oil, or we're going to come and take it. Which way do you want it? And so for a while that settled that until the broader inflation in the latter part of the 1970s. But today you have a situation where a lot of countries with a lot of natural resources aren't going to settle for crumbs anymore. They're not going to settle for being the vassal subservient states of the US or Europe or China. And that's going to keep upward pressure on everything going forward as well. So folks, when you hear Jerome Powell confidently again, who couldn't have been more wrong in most of his prognostications for quite a while, tell you that the Fed sees inflation getting back down to its 2% target in 2023, about the only way that happens is if we have a complete bloodbath and depression and everything falls. So if you think that's going to happen, then maybe for a while we'll get back down to 2%. Barring that, forget it.
So one of the themes I've heard you discuss is something about the world being turned upside down. What do you mean by that?
Well, you know, none of us alive today has ever lived in a world that, number one, did not revolve around primarily the economic power and leadership in some ways of the United States of America, and number two, did not have as the global reserve currency the US dollar. And both of those things are changing. Eric, a lot of it is a part of the retreat from globalization that frankly started before the Ukraine war. The Ukraine war has multiplied this, I think, several times, all of these trends, including in what's going on with Russia, which has been extraordinary when you look, you know, and not to minimize at all the loss of life and everything in the war, but we're not hearing this in our press, okay, for the most part, but the dramatically augmented economic stature that Russia now has as a result of this. And again, this sounds nuts if all you listen to is the controlled Western press. But I'm telling you, Russia in the first quarter, and you can look this up if you don't believe me, folks, Russia in the first quarter had by far and away its largest current account surplus ever. There has been a lot of news about how Russia is now demanding rubles in payment of things. All right. Now, this is just one small part of this, and Russia still, because I don't want to overstate this either, when you look at how much trade is done in rubles compared to the total global amount in dollars, it's barely a rounding error at this point in time. But that is going to change. That's going to evolve. And what is emerging, folks, and we're going to get into this a lot at the conference, the US dollar, look, it's not going to go away tomorrow. There's been all kinds of goofy prognostications for years, usually pitches to try and scare you into buying gold, scare you into buying somebody's newsletter or product. You know, they all set dates. Here's, you know, one of them, the most infamous one was one guy several years ago who deliberately misled people about what did happen at the IMF when they brought in the Chinese currency as part of their SDR formula. And he was trying to paint that into being a wholesale, you know, the death of the dollar, and we're going to have a new IMF currency. Just nonsense. But here's what is starting to happen. A decade ago, the total representation of dollars in all global foreign exchange reserves was about 65%. And that number had not changed a great deal in recent over the years. It really never was. It's never been 100%, never been 90 or 80%, because there's still sterling. There's been euros around for 20 or 22 years now, whatever it's been. But for the first time, we just dipped under 60% in the post-Bretton Woods era. By the time I'm on to my reward, whatever it might be, I hope there's something, we may be down to 40% or 45%, because a multipolar world is going to emerge. And folks, dust off from your history books something called the Monroe Doctrine. We're going to talk about this at the conference, because this is going to be forced on this country, whether we like it or not. We are not going to be forever the kingmaker, the arbiter of who lives where and who lives next to who and whose borders are what all over the world, like we've been pretty much since the end of World War II. That regiment is going to be leaving. We can only hope and pray that it leaves with all of us still in one piece and without the crazy people that brought us to this point blowing up the entire world. Hopefully that is the case. If it's not, then none of this is going to matter. But what we are going to have to reckon with, Eric, is that going forward, we're going to have to worry about our own household in our own hemisphere. We need to have a situation where we have an urgent emergency plan on the scale of the Marshall Plan. Jamie Dimon of JP Morgan was one of the latest big public figures to say this. I've been saying it forever. Others have been saying it forever. We need to figure out where our energy is coming from, you know, over the next couple or 3 generations, and do it yesterday, because this idea of living, you know, just day to day, doing things by the seat of our pants, and most of all, depending on China, on Russia, on other places for these things, that's over. I mean, Eric, even before the Ukraine war, these countries, especially in Europe, are starting to all get their carbon taxes dusted off and organized and put into place. So forget war and anything like that. The cost of doing business going forward, even if the world is completely at peace, means that a pound of nickel that comes from Russia is going to cost more than a pound of nickel that comes from Minnesota, right? Just because of these carbon taxes. So in the name of trying to green the environment and reduce carbon emissions, both of them wonderful goals that we all need to support, but that also means that costs are going to rise. And now when you add war and conflict into this mess, it means that it's more urgent for us to get our act together as a country. You know, this present administration, we've talked about a lot, has not done the American people any favors with its energy policy, because for all the talk about the president wants 50% of all new cars as EVs, by the year 2030. He's been like, we'll show here, my cartoonist did one of these things recently. He's like the Pharaoh saying, well, you can have, you can't have any materials, but your tally of EVs shall not diminish. And they claim that they're trying to change that policy, but it isn't really happening yet. And we're gonna have a couple of people at the conference specifically who are nationally known public policy experts talking about this and about how hopefully we solve that problem. And of course, with all of this as well, Eric, obviously, we're trying to show investors and financial professionals, people in the media, how to get their heads around all of this, and particularly for investors and financial professionals, how to do this, protecting themselves, protecting their clients, and profiting into many places there are to profit from these trends also.
So does any of this mean that those that have been calling for the death of the dollar are finally right?
No, the dollar is going to be here for our lifetimes and our grandchildren's lifetimes. But as I said, I think we're going to see the dollar's role gradually diminish. We're going to have a multipolar world where you're going to have the US dollar will very certainly remain the reserve currency and the king of the hill in the Western hemisphere. And if we were doing things properly, I should add here, we would be, instead of worrying about what's going on in Ukraine, a problem that the US largely was responsible for causing over the last several years and bringing to this point where Russia just was getting tired of being encircled by NATO. You know, rather than doing this and spending money and roiling Europe, 2 generations after World War I was over, just to keep hundreds of billions of dollars going to the military industrial complex, we should have let Europe alone, let Germany and France and everybody else figure out how to get along with and live with Russia. Had that happened, and some people might turn me off at this point, but I'm sorry, had that happened, we would not be at this place today. Europe would be at peace, and Russia would be an ally of the West against the real global menace, security, economically and otherwise, which is China. But that's a whole other story, okay? What we should have been doing all along is directing our focus and attention to our own backyard and making sure that it was the US, not Russia in some places like is now the case, certainly not China in some places like is now the case, but the US that was the big brother to all of South America, because they're in our backyard now too, just like we're over there. It should never have happened like that. And hopefully at some point before it's too late, we get the leadership to figure it all out, because we could still have, as Americans and as an American economy, a good outcome from all of this if we worry about our own backyard, our own neighbors. Canada's a wonderful ally. We've got several Canadian-based companies, resources, and otherwise that are coming to the conference. We need to be buddies with Canada, with Mexico, with South America, first and foremost.
So what are some of the key investment themes in all of this?
Well, look, energy and the coming, well, the already here, I guess you'd say, Eric, energy crisis, which is going to get worse before it gets better, unfortunately, because there's not been the kind of planning. There is not, I listened to Jeff Curry from Goldman Sachs this morning also, who has been pounding the table on this for the last couple of years. And he said, look, this is not, you can't look at this just as a supply and demand issue. This is another thing the Fed tries to sell us on, which is a red herring of an argument. And that is that, well, its supply chains have been slowed down from COVID. If only COVID would go away and people get back to work, all of these prices would come back down. Guess what? COVID has been going away. There's only mild cases of it. People have been going back to work, but we still have the same problem. We have the same problem, Eric, because there's been so little investment compared to what is needed to keep the kind of energy flowing in a world where, and recession, deflation, inflation, whatever, for as far back as you want to look, we got 7+ billion people on this planet. It's still growing. A lot of countries that were developing are becoming more developed. That requires all kinds of commodities. It requires all kinds of energy, and inexorably the demand for energy continues to rise the world over, some places more than others. And we have not kept up with that. And of all the things, and I want to take too much more time today, but of all of the things that just underscore the idiocy of what has happened here in the US of A, is you've got a Treasury Secretary who has spearheaded the effort to penalize financial institutions for investing money in the fossil fuel industries, which we still need until we get the green part of things put back together more and can wean ourselves off of these things, which we will do someday. And I would suggest that in some cases, I agree, we need to do that. But you don't shut off the spigots to the oil and natural gas and coal industries before your green economy over here is ready. You don't have the battery metals. I mean, I've listened to some corporate heads that run, certainly not Elon Musk, he gets all of this, but some others that claim that they're going to be, building X number of EVs. And one of them was asked recently where she's going to get all these metals from. She doesn't have the slightest idea. All she can do is throw out platitudes. Well, the people want this. They want us to do this. Well, how are you going to do it? Okay. And this is, me and others have, used the term that the milk comes from the grocery store crowd. We're going to find out real fast that not only doesn't milk come from the grocery store, but new Teslas and EVs from others don't grow on trees. These companies don't have a magic extrusion machine that just from whatever dark particle matter that we can't see, just sucks it out of the air and poof, it spits out an electric vehicle. Doesn't work that way. So we're in trouble. We're in real serious trouble going forward. So our strategies, and a long-winded answer to your question, is to show people how to protect themselves from the parts of the economy that are going to get hit from the rising costs led by energy, but which of these areas are still wise to invest in. Uranium is going to be an especially big subject. One of our panelists will be Scott Melby from the Uranium Producers of America, a friend of mine for many years, one of the smartest guys on the planet when it comes to this industry. And, our folks that have been in uranium stocks, it's our heaviest sector and has been for over a year. We've been very happy with that, and it's only starting.
Those are some great themes, and look forward to hearing more about those specific companies that will be at the show. And I would hope everybody would take the time today to look at the exhibitors we have on our website that are going to be coming to the show. We have some awesome companies that are going to be there that it's really going to be a great event for Chicago and for all of the community there, both investment professionals and the retail investor alike. So I hope everybody can take the time and join us. And if you cannot make it to the show, we do have some other ways you can virtually participate. So make sure to take a look at our website, strategicinvestmentinsights.com, and feel free to send me a message if you have any questions about the show, or if if you're a media outlet or somebody that would like to participate with us somehow. We love to communicate and to work with our Chicago area family. And we look forward to being a part of the Chicago investment community going forward. So, Chris, thanks for taking the time to talk with us today. And we look forward to seeing you at the show May 6th and 7th up at the Lincolnshire Marriott Resort.
Absolutely. Thanks, Eric.
Thanks, Chris.